Let's bring in Fundstrat Head of Research, Tom Lee. Tom, always good to see you. So we've got to start with the big picture, including politics. Fortunately, former President Trump was not significantly injured in this assassination attempt over the weekend. But just talking about the impact on investments as well of this overall environment. If President Trump were to win, you say it would be positive for Bitcoin and for cyclicals and commercial REITs. But I'm curious, why negative energy and healthcare?
Thank you, John. I think the reason it's negative for energy is somewhat counterintuitive, but President Trump is favorable for drilling, and he'd want to expand where we look for oil, but that would put downside pressure on oil prices. So that's why we think it would actually ultimately be negative for energy stocks. And for healthcare, I think it has a lot to do with, potentially repealing Obamacare, but also just the fact that pharmaceutical companies and their pricing, I think, would come under a lot more scrutiny as well.
Okay. Now, I got to ask about your small cap call. I think you said a few months ago that small caps could rise 50%. We saw at the end of last week some interesting rotation into small caps. How much further in 24 can they run?
I think the rally that started last week for small caps is going to be larger than the October to December rally of last year. That was over 8 weeks, almost a 30% gain for the Russell 2000. This time we have a larger short position by institutions. We have small caps even more oversold, and valuations, whether you look at median PE, which is now at 10 times 2025 earnings, even lower. So we think that this move could be something like 10 weeks and as much as 40%. So I think it is just starting, and a lot of it has to do with the fact that, the June CPI was so astonishingly soft. I think it's giving the green light for small caps to rally finally, because the Fed will ultimately cut, hopefully by September.
And how much do you expect the S&P to potentially rise over that same 10 weeks?
That's a good question. I think July, our base case remains that July should be good for the S&P 500. So, something like 57, maybe even close to 5,800 in July. But I think that August is really going to be one where the rotation becomes more evident, and I think it's going to be a stronger small cap and maybe flat to slightly down for the S&P.
Okay, and so that's what I was getting at is how strong can the small cap, say the Russell 2000 as a proxy, be versus the S&P 500? And you're saying after July, you actually think that there's going to be a significant outperformance of small caps versus that index?
Yes, and that's kind of what happened in that October to December rally. That, as you know, the large caps actually really sputtered in late December and early January because of that rotation into small caps. And I think, again, because the positioning is even more short relative to large caps, that it could be an even more sizable move.
All right, guys, this is the part of the video where I'm going to break down the stocks that were mentioned in the CNBC clip. Today they talked about the small caps, the S&P 500, the NASDAQ, and the Dow. So we'll briefly break down those 4 stocks. If this is your first video, the blue line is the 45-day moving average, and the green line is the 200-day moving average. So right off the bat, you can see the Russell 2000 had a pretty major dip back in October and November. Then it had a very nice recovery, and ever since then has been making the 45-day moving average support. You can see back here in April, it tried to break below the 45-day moving average, but instantly got bought back up. It made it support one more time, and now we're having a technical breakout past 2150. Guys, this is looking very, very bullish with how long we consolidated sideways, and now we're breaking out to new all-time highs. So small caps are looking extremely bullish. Tom Lee still calling from 40% from here. That is quite a bold call. We'll see how it works out. The S&P 500 is looking magnificent. We had that same drop back in November, and ever since then have just been on a perfect technical uptrend. The S&P 500 has been so bullish that we've only touched the 45-day moving average twice. Once back here in April and once here in June. Ever since then, we've been on a technical uptrend, making higher highs and higher lows. We are getting more and more extended by the day. Even in bull markets, there needs to be healthy pullbacks. So every day that we extend higher like this, we're getting closer to a pullback like this. I just want you guys to realize we do come back and touch the 45-day moving average every several months, even in a bull market, and we haven't touched it in several months. Just something to keep an eye on. The NASDAQ is looking just as bullish, if not more bullish, holding that 45-day moving average. This might be the start of some chop and churn like back here before we kind of go sideways and or sell off for a little bit. It would be healthy. Look how extended we are. We're so far off the 200-day moving average. We touched it back in November, guys. That wasn't that long ago. So it's very hard to recommend putting new money to work without a pullback. And now onto the Dow Industrial Average. Also extremely bullish, guys, holding that 45-day moving average, breaking out to new all-time record close highs today, guys. That is 4 out of 4 markets that are bullish, 4 out of 4 markets that are on a major uptrend. That doesn't seem to happen very often. The Dow is looking very bullish. We just had a technical breakout of $400 per share, and we should keep going higher. I hope you guys enjoyed the video. If you did, smash that like button and subscribe if you haven't already, and I'll see you in the next one. Peace.